Welcome to the Apex. This channel is not for followers, it's for catalysts. You think you're investing in the AI revolution. You're buying the popular tickers, the chips, the hyperscalers. You're riding the wave. But what if I told you the biggest threat to your portfolio isn't a market crash? It's a cognitive virus that is already wired into your brain, and the AI market is designed to exploit it. The herd is about to lose billions, not because the technology is flawed, but because their mindset is. They are suffering from the availability heuristic, making decisions based on what is most easily recalled, the headlines, the massive recent gains. Today, we're not just looking at AI stocks. We're giving you the blueprint to inoculate yourself against the market's psychological traps. We are exposing the AI hype cycle and arming you with the catalyst filter, v2.0. The AI market of 2024-2025 is a perfect psychological minefield. It exploits two major flaws, recency bias and confirmation bias. Because the last 18 months showed staggering historic gains from companies like Nvidia, NVDA, and Microsoft, MSFT, the herd now believes all future gains must come from these same hyper-growth stories. This is recency bias in action. They ignore historical data showing that the largest gains often come from the infrastructure builders in the beginning and later, the application innovators. They then seek out information, YouTube videos, news articles, Reddit threads, that only confirm their existing belief that AI can only go up. That's confirmation bias. They miss the crucial data-driven red flags. Circular financing, reports showing major AI players like Oracle, ORCL, and OpenAI essentially borrowing from and paying each other, creating a financial echo chamber, not genuine organic profit. Valuation detachment, companies with soaring valuations but a clear path to $5 billion in projected losses, like some in the core AI model space. The herd is reacting to the narrative. A catalyst reacts to the data. Chapter 3. Framework, Solution. Introducing the Catalyst Filter v2.0. To move beyond the herd mentality, you need a cold, analytical framework. We call it the Catalyst Filter v2.0. This framework helps you bypass your ingrained biases and look for hidden leverage in the AI space. Step 1. De-hype the ticker. Question. What is the price to earnings or price to sales ratio right now? Action. If a stock's PE is above 60x purely because of the AI story, force yourself to find 3 legitimate data-backed reasons why the valuation is justified. If you can't, that's a sign of herd mentality. Hold off. Step 2. Follow the hidden infrastructure. Question. Who benefits, no matter which AI model wins? Action. Look beyond the GPU makers. Find companies providing power grid solutions, advanced cooling for data centers, or next-gen fiber optics. They sell the shovels to the gold miners, insulating themselves from the speculative rush. Step 3. Quantify the AI wash. Question. What percentage of the company's current confirmed revenue is actually from new AI products? Action. If a company markets AI heavily, but 95% of its revenue still comes from legacy business, you're buying hype, not growth. Demand to see real, measurable AI revenue growth, not just press releases. Step 4. Exploit the lagging sector. Question. Which non-tech sector is forced to adopt AI to survive or achieve massive margin expansion? Action. Target sectors with low current AI adoption but high potential efficiency gains, like logistics, specialized materials, or old-school manufacturing. These are the future buyers of AI, and their stocks haven't yet priced in the catalyst. Let's apply the catalyst filter v2.0 to a real-world scenario. The herd, driven by availability heuristic, is still fixated on big tech's latest generative AI models. They see a $100 billion valuation for an unproven company and think they missed the boat. This leads to loss aversion, the fear of missing out, driving them to buy high. What the catalyst sees: the herd. They buy a $250 stock with a 70x PE that has an AI buzzword in every filing. They ignore the fact that the company's Q3 revenue only grew by 2% from AI applications. The catalyst, filter v2.0 in action. We execute step 2 and look for hidden infrastructure. We see that the unprecedented demand for AI data centers is stressing the power grid. Consider a company like Eaton Corp, ETN. It sells electrical power distribution and management systems, the unsexy infrastructure that powers the AI wave. D-hype check. The stock price has risen, but its PE is grounded by consistent non-AI business, offering a buffer against a tech correction. Hidden infrastructure. Their orders for specialized, high-density power components for data centers are up 40% year over year. Actual hypothetical data point. Revenue reality check. Unlike the AI-washed companies, the revenue from these essential components is tangible, confirmed, and mission-critical. If the power systems fail, the billion-dollar GPU stacks go dark. While the herd is gambling on which AI model will be dominant, the catalyst is silently accumulating the company that sells the high-margin plumbing for all the models. That's the difference between being a follower and being a catalyst. To replicate this, you need data, not emotion. Your actionable tool is simple. Use a free tool like Finviz or Y-charts and run 2 simultaneous filters. Filter 1, the hype, sector, Azure, technology, industry, Azure, software, PE, 50. Check these stocks for the absence of real revenue growth. This is the watch list of caution. Filter 2, the catalyst, sector, industrials or utilities. Keywords, Chakra, data center, power management, or advanced cooling. Look for companies with double-digit backlog growth and a PE below 30. These are your high-leverage, low-bias opportunities. The catalyst doesn't chase yesterday's winner. We anticipate the next bottleneck in the AI value chain and invest there before the herd even understands what a bottleneck is. This is how you generate social currency. You don't share the obvious, you share the insider insight. The future is built by catalysts, and the path to the apex is paved with data, not emotion. The next time you see a flashy AI headline, stop. Ask yourself, is this a genuine investment catalyst, or is it simply the market preying on my recency bias? Don't just invest. Catalyze your way to the apex. If you want to trade the market biases, not be traded by them, subscribe now. Join the ones who get it. Hit the notification bell. What major AI bias do you think is the most dangerous right now? Let me know in the comments below. We're building a tribe that is immune to the herd. Are you in?